Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the market cycle return on investment, or ROI, as measured from the market cycle bottom and as measured from the halving. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. I'm also going to post another Telegram group where I put out alerts and news, basically informing people when I'm putting out videos, maybe some tweets, that kind of stuff. So if you're not in that Telegram group, I post there and then people can comment under the post. So make sure you guys check that out. You can find a link to that in the description below as well, and I'll also pin it as a comment. Okay, so let's go ahead and jump in. So I've shown this chart many times before, and I like to do a general update on it, maybe about once a month or so, just so we are sort of aware, theoretically speaking anyways, where we are in the current Bitcoin market cycle. Cycle 1, as measured from the market cycle bottom, put in a very modest 700x as measured from the bottom. Cycle 2, on the other hand, came in at a very humble 500x. Okay? Now, these two cycles completely overshadowed what happened in cycle 3, which was a mere 100x. Technically speaking, it was over 100x because we do know that the market cycle bottom for Bitcoin was around $170 or something like that. And then it ultimately went up to just shy of $20,000. So it was a little over 100x, and you can see that because it goes slightly above 10 squared, which is 100. Note that this is a logarithmic scale, okay? So 10 to the 0 is 1. That's why they're all normalized to 1. 10 to the first power is 10. 10 squared is 100. 10 cubed is 1,000. So we've seen a 700x, a 500x, and just over 100x, okay? So we looked at this chart years and years ago, and our speculation was two things, right? It was two things. First of all, we would expect we're going to have diminishing returns. Second of all, we would expect we're going to have lengthening cycles. Now, again, these two theories are not mutually exclusive. You can have one without the other. And if 64K does end up being the market cycle top, then rather than having lengthening cycles, we just had diminishing returns. Now, I'm still speculating that the cycle will ultimately lengthen and that we will ultimately take out 64K before, say, that we get to the next halving and whatnot. I mean, I think we'll be able to put in new all-time highs, if not this year, next year. And I do think that we will continue moving along the way. I don't think we're headed for a 3-year bear market / accumulation phase. Okay, I'm not thinking that we're heading towards that at this point. So we looked at this chart back then and we said, you know what? We've had 3 cycles so far as measured from their market cycle bottoms. We've seen diminishing returns. We've seen lengthening cycles. If we put over the current one, it actually at one point was ahead of cycle 2 back in the day. But remember, even back over here, we ultimately did not keep pace with it, right? We got above cycle 2 for a little bit. We were unable to keep pace with it. And then we came over to cycle 3, and then everyone started getting all up in arms saying that we're not going to have diminishing returns, that Bitcoin's going to go to $300,000 by September. We're all going to sing Kumbaya, come back in a few years, and I'll do it again, right? What happened, right? What happened back in the summer when they were preaching 300K? No, I said we're overheated. We need to have a lull in the market, 3 to 6 months. We've had 3 months, okay? And that's what we got, right? So now we, in fact, are underneath the prior market cycle's return on investment, right? We're underneath it. And even then, even with this move here, people were saying, oh, we're just going to get right back on track and still go to 300K, within a couple months or so. No, right? No, doesn't look like it's happening right now. I mean, can we 100% rule it out? No, we shouldn't 100% rule anything out. We shouldn't rule anything out. But the likelihood that Bitcoin from this point just goes straight up in the next couple of months to go to 300K is highly unlikely. Okay, it is highly unlikely. I'm not saying we can't go up. I'm not saying we can't put in new all-time highs. But the likelihood that we go and put in a $300,000 Bitcoin that quickly, very, very unlikely. So what we've done is more or less what we speculated, was that, okay, we'll ultimately come back down below the prior cycle's return on investment. We'll have to pick ourselves up by our bootstraps and continue along the way. And there's a decent chance going into October, November, December we see Bitcoin's price rally. Okay, where we know that Q4 historically, a lot of times Bitcoin dominance can take over for a while, whether it means it's going up or down. Bitcoin dominance, we've seen it go up a lot in Q4 in prior years. But with that said, it still is a bit deterministic to think that it has to happen, a market cycle peak in Q4. Now, with that said, we will follow it closely. All right, if we're going to 140K or something by December, then we'll contend that it's likely the market cycle peak. Okay, that will be my general contention if we move up over the next 3 months and go to somewhere between 1 to 200,000. Then at that point we will at least have to contend that the cycle peak could be in. But at this point, we're more or less just doing what we would have expected we were going to do. Okay. I should also say there's a lot of misconceptions in the crypto community. A lot of people seem to think that Bitcoin only ever peaks in December. It's just simply not true. Okay, it's just simply not true. The first cycle peaked in the summer. Okay, this was a summer peak. This one, everyone says it was December, but again, I don't know what chart they're looking at because every chart I look at has the peak in November of 2013. But everyone just sort of rounds it to December because that fits the narrative of it having to peak in December. So again, the first cycle was in the summer. This one was in November. This one was in December. Is it possible that Bitcoin peaks this December? Yeah, it's possible. Anything's possible. It's also possible it peaks next December. It's also possible it peaks in January or March or April. If you think back to 2020, we had a good October, November, December, and we also had a good January, February, March, and April. Okay, so we'll continue to monitor the price of Bitcoin. Another thing too that we have to consider is that this cycle is a lot different than the last cycle. Okay, so I see some people saying, all right, we're just going to do exactly what we did in 2017. We're just going to go parabolic in Q4 and put in a blow off top within the next couple of months. Okay, and we also have to remember though, this cycle so far looks nothing like 2017. It just doesn't look like anything like it in the sense of what has it done over the last, say, 7 or 8 months. Now, obviously, in terms of the return on investment, there have been some similarities at various phases, right? But if you looked at the last cycle, this was September of the last cycle. We had this bottom here, but we were putting in all-time highs even throughout the summer, right? We put in new all-time highs, we'd have a pullback, a new all-time high, we'd have a pullback, and then we went on a major parabolic move. This time, we went on a major parabolic move, we leveled off for several months, then we fell below it, we've come back up a little bit, and now we're trying to hold the bull market support band. But we haven't put in a new all-time high in 5 or 6 months at this point, right? It does not look like 2017. Again, if anything, it looks more like 2013. And this has been our argument all along, is that it seems like it's a stretched out version of 2013. That's what we've said. We've maintained that for years now. For years, well, maybe not for years, we've maintained for years that we'll have lengthening cycles. We've maintained from, since January or February that it looks more like 2013 than like a 2017 move. But again, a stretched out version of it. You can see that if this is the 2019, this is like, say, that first move right here, maybe that could be similar to the 2019 move that Bitcoin had. And then it ultimately had this other run up. Maybe it's similar to this run up here, just delayed. Then we had this lull in the market in 2013. Now we're getting that same type of similar lull now. And then ultimately, I hope that we go in another leg. Does it have to happen? Do we have to go to 300K next month or 2 months from now? Absolutely not. Right? Absolutely not. We do not have to do that. Just because just because that's exactly what happened in 2013 does not mean it has to happen exactly like that this year. Now, with that said, I've maintained for the last 3 years that we will always keep an eye on the market cycle ROI going into Q4. All right, so as we go into Q4, we'll keep an eye on it, and if we start going parabolic and go up, and it's looking market cycle peak like, then we'll say, you know what? Theory is wrong, right? Lengthening cycle is probably wrong, and we'll take it, we'll take it in stride. But at this point, the only thing that we do know is that if 64K was the peak, then we have diminishing returns and we had a shortened cycle. If 64K is not the peak, which I don't think it is, if it's not the peak, then ultimately what will happen is then we'll have to, instead of discussing, or instead of thinking that it might be diminishing returns, then people will start to go back to, well, maybe we don't have diminishing returns and we have lengthening cycles, okay? So again, the two theories are not mutually exclusive. You could have one without the other. You can have diminishing returns without lengthening cycles. You could have lengthening cycles without diminishing returns. If I had to pick one, I would say, hey, let's have lengthening cycles. I don't understand why so many people get so offended when I suggest that lengthening cycles could be a thing. I really don't. It's like, I just want, I don't mind the party going on. It's like some people want the party to stop at midnight. Why not have it go till 4 a.m., right? Now, the rebuttal to that would be, well, it's not what they want to happen. It's what they think will happen. But again, we've looked at the charts as well, and there is a lot of evidence to suggest that the cycle could extend far beyond 2021. Okay, we've mentioned this many, many times. And so as I've tried to prepare everyone for the last 2 years, right? As we head into Q4, we will, of course, be open-minded and say, hey, see what happens. We'll stay open-minded and thinking that it could be a market cycle peak, and I will be disciplined to bring you the data no matter what happens, of course. But we are getting into crunch time if September through December is supposed to be when the market cycle peak is going to occur. It's pretty clear it's not going to be September at this point. I don't know how it could be October either. We just don't have time. We're not even at all-time highs, right? We haven't even put in an all-time high for 5 or 6 months. So I don't think it makes a whole lot of sense at this moment to be claiming we know exactly when the market cycle peak's going to be. Let's at least get to a new all-time high first, right? Let's get to that first, and then we can talk more about it. But at this point, we're just kind of, I don't want to say we're playing in the sandbox because we're not below the 20-week moving average, but maybe we're playing, we're on the playground or something. We're just, we're having some fun. We're seeing what Bitcoin does. As long as it's above the bull market support band, we know altcoins will rally. But at this point, hopefully the party will keep on going for a while. Now, some people look at this chart and they say, well, the cycle ROI from cycle 1 and 2 is the same because they look really similar. But again, this is a log scale. If you put it on a linear scale, you can see the difference, right? This is diminishing returns. Diminishing returns is just like a law of nature. It's like, if you have I have a laptop, for instance. You have a laptop in front of me. It's not a fancy desktop computer. It's just a laptop. And in order to maximize my efficiency, I have a monitor, okay? And I use that monitor to give me more real estate in terms of screen space without having to bring up new windows and stuff and minimize and whatnot. So what I do is I have a monitor. Now, could I have a third so I have my laptop screen, I have a monitor, so I have 2 screens. Could I have a third screen? Yeah, I could. And maybe it would help a little, right? Maybe it would help a little. But it's not going to help as much as the second screen that I have, okay? So doubling up your how many screens you have can help a lot, because then you can put something on one screen and then reference it while you're doing something on the other screen. If you have 3 screens, can it be useful? Yeah, I've had 3 screens before, and there's some benefits to it. 4 screens, 5 screens, no. Eventually, you're just getting diminishing returns. Having a 30-second screen in front of you is not going to do you any good because you just don't have the capacity to utilize all that, right? You just don't have the capacity to utilize everything. So the whole idea is that diminishing returns is not just a thing we see with Bitcoin. It's just a fact of life, right? It's just a fact of life that you're gonna see diminishing returns in a lot of different things. And with things like assets, like Bitcoin, you would expect it because again, the market capitalization is growing like crazy, and it's gonna just take exponentially more volume to move Bitcoin's market cap, right? To move its price. So. Of course, the counter argument to that as well, you're not counting institutional money. Well, I know I am. Back in 2019, I said, hey, we need institutional money to come in to get us to $100,000. We're getting institutional money, right? We've been getting institutional money. Tesla, you have MicroStrategy. I'm sure there's a lot of other, smaller companies and whatnot that are coming in. But in general, you need institutional money to get to these much higher valuations. So it's not that getting institutional money, in my opinion, changes the game. It's just the natural progression, right? It's what comes next. It's what comes next to get us to the next level. Okay. What's interesting when you look at this chart and you see the diminishing returns on the linear scale, the current cycle is the purple one. It's barely noticeable. Like you don't even hardly notice it. Like it's this little thing down here. And think about the crazy Bitcoin returns that people have experienced. We watched it go from 3,100 up to 64,000. And think about how life-changing that was for a lot of people. And look what it looks like on this chart compared to the prior cycles. I mean, it's nothing, right? It's just nothing compared to the prior cycles. Sometimes I see people say things like, well, I don't believe in diminishing returns, but I think Bitcoin's going to peak at 100,000. And I'm like, wait a minute, that is diminishing returns, right? We're not saying Bitcoin can't go to 100K. We're just saying that it's probably not going to make it to 300K this market cycle. Okay, so I think some people assume that diminishing returns means you can't reach 100,000, but it's never meant that. It never once has that meant that. It's just simple math to show, is it diminishing as measured from the halving or as measured from the bottom? As long as we don't go to 300K this cycle, we've had diminishing returns as measured from the market cycle bottom. Okay, it's pretty clear, pretty evident on the chart. Again, in order for us to get there, we'd have to go over 100x. 100x from the bottom would be 310,000. Okay, so you guys see it on the chart. This is what we mean when we say diminishing returns. Now, I wanted to show this too because we are really getting into crunch time for those that are hoping that the market cycle peak does occur without a lengthened cycle, because this is all the room you have left to go. All right. Now, there are some nuances we haven't really talked a whole lot about before related to what a lengthened cycle is. Okay. Now, a lot of people might assume that a lengthened cycle has to go into 2022. And I would contend that the cycle will go into 2022. But technically, from the bottom, if it goes to December, it would still be technically lengthened by a month. Now, of course, we're not going to use the December market cycle peak to say, hey, look how much longer it's lengthened. No, it would probably be within the round or, within some tolerance there to say, all right, it's generally happened within 4 years. But the reason why technically it would extend beyond this within only a couple months is because the market cycle bottom for this cycle happened in December, but for the prior cycle, it happened in January, which happened a month later. Okay. So because of that, we are 1 month ahead of where we were in the last cycle in terms of the calendar year. So again, I'm not saying that a December peak is going to definitively prove one way or another whether it's a lengthened cycle or not. But what I am saying is that come December, it will actually be further out than the one we had last time, and you might be confused by that. And I'm just telling you now why that's going to be the case. It's just because the market cycle peak for this cycle occurred 1 month before, because it occurred in December of 2018. In the prior cycle, it occurred in January of 2015. So that month is why this one would only take us out till November. Okay, but again, if it goes till December, it's still going to be pretty similar to the last one. Okay, it would still be pretty similar to the last one. Now, a lot of people who like to measure the market cycle ROI like to do so from the halving. Okay. And I don't. I prefer measuring it from the bottom, but it provides another reference point. From the halving, you can see the first cycle went about 90x or so, maybe a little bit more. Second cycle came up all the way up to about 30x or so. Current cycle, here we are, right? This is 1, so this is 2, 3, 4. We're about 5x up from the bottom. All right, 5x from the bottom. So the question is, well, are we going to get another leg to the cycle, or are we just going to go all the way back down and then spend a couple years playing in the sandbox? I hope it's not the latter. But what's interesting about this chart is this. And what this shows is that as measured from the halving, we will be at a lengthened cycle coming up here in a couple months as well. And the reason is because the halving in 2016 occurred in July. The halving in 2020 occurred in May. So again, we were a couple of months ahead in the calendar year from where we were the prior time. So that's just something to keep in mind. So the reason I'm telling you this is because once we get later in the year, then you'll see these actually start to slightly extend beyond what the last one did. I mean, this is still assuming we're going to have a higher valuation than 64K. And the reason is because the reference points are slightly different, okay? I mean, again, I think we're going to go into 2022 regardless, but the reasoning is because the reference points are, in fact, slightly different. You know, if we do a little bit of back of the envelope math, this was a 90x, this was a 30x, so about 1/3, right? About 1/3. A 30x, if we were to do a 1/3 from there for this cycle, would put us at 10x from the halving. I mean, conservatively, that would be putting us, what, 85,000, 90,000, because we were around 8,500 or something by the last halving. So again, this is just dubious speculation, of course. But I just want to show you guys, now that we're getting into crunch time, we're getting into Q4, we are getting close to the point where we're either going to, I mean, you know, these things we've debated for the past several years, we're going to have a resolution sooner than later, okay? If we have a market, if we have a blow off top in Q4 and we go into a pretty brutal 2022 bear market, then hey, you know, 4-year cycle looks good. If we end up trending higher into 2022, then lengthening cycles wins. If we just have a bear market from here and we just go down and we go back down to, say, $15,000 or something, then we had diminishing returns. And then the 4-year cycle and then lengthening cycles are both out the window, right? Then both of them are out the window. So, you know, all these theories that have been developed over the last several years, we should have a pretty good idea of which ones will stand the test of time sooner rather than later. Again, my speculation has always been on lengthening cycles and diminishing returns. If I had to pick one, I'd probably prefer lengthening cycles. I mean, who doesn't want a $300,000 Bitcoin? But let's at least temper our expectations before we get too carried away. So if you guys like the content, remember we do have the premium list at intothecryptoverse.com. Make sure you guys check that out if you want to know how I am navigating these markets. Subscribe, click the bell icon to turn on notifications, and I will see you next time. Bye.